The graphics of candlestick signals and patterns also use the elements or the indicators that everybody else is watching, the moving averages, except for the T-line. Nobody has the T-line on their charts. However, today when they sold this market off because the service sector indicator was lower, they took it right down to the area that everybody was watching to see if it was going to act as support. Notice that it did a hammer signal today in the oversold area. Does this necessarily mean the downtrend is over? Maybe not. We'll have to see what type of trading occurs tomorrow. However, it probably indicates that this was an area that clearly indicated that this is where the bulls were starting to step in. The same scenario applies to the NASDAQ. Right at the 200-day moving average, it reversed and started coming back up. Within a couple pennies of opening today at the close of yesterday and creating a bullish engulfing signal. Worst case scenario, investor sentiment has changed at least to the possibility of bouncing back up to the T-line. This allows for the strong charts that created bullish signals today and bearish charts that also created potential reversal signals. Told you to close out the short positions, take profits, and then start adding to the long positions. Roku, for example, after a fry pan bottom indecisive trading, did close back up above the T-line. If it opens positive, it's telling us the probabilities are pretty strong. It's coming back up to test the 50, making this for a option trader or even a stock trader an excellent place to be buying based upon bullish confirmation. The fact that they could close it above the T-line tells us if they open positive tomorrow, the T-line is not a resistance factor. And the results of candlestick reversal signals indicate which sectors or which stocks have the greatest potential of an up move. If you look at the BABA chart, notice yesterday it didn't do a real reversal signal. So today's positive trading took you to the area that you knew would probably be the first resistance, the 200-day moving average and the T-line. This could be equated to being maybe a good reversal, but the factors from a candlestick reversal signal and a close above the T-line gives you much more relevant information. Notice that the dojis or the lows were bouncing up off the 50. Then a doji, followed by a bullish engulfing signal or a bullish candle telling us the T-line was not acting as resistance. Why is this better than the BABA chart? Because they've gone through the resistance. This has much greater prospects of continuing the uptrend because it doesn't have the T-line that could be still a resistance factor. Charts like CGC in the weed stock area is more compelling when they have a reversal signal like an a morning star signal. A big down day, a day of indecision, and the third day closes more than halfway up this candle and right at the T-line area. This makes for a much higher probability of being in a profitable trade based upon if it opens positive tomorrow. There's two significant factors. One, it's confirming the morning star signal, one of the 12 major signals. And two, it's telling us the T-line resistance level is not acting as resistance. Our next potential target is the next level, the 50-day moving average. Utilizing the information that is built into candlestick analysis allows the investor not only to identify the best reversals or a true reversal, but it also shows you which one of those reversals have the strongest upside potential based upon a reversal in the market. That'll be it. We'll see you in the chat rooms.